Economists sometimes say that there are four kinds of economies: developed, undeveloped, Argentina, and Japan. The latter of which has spent most of the past 3 decades defying economic gravity by printing and borrowing absurd amounts of money without inviting too much inflation or pushback from the bond markets. However, as Japan's economy has started to look more normal, the problems you would expect from such a heavily indebted economy have materialized, including rising borrowing costs and depreciated currency, with the Japanese yen now touching a 40-year low earlier this week. So in this video, we're going to explain what's gone wrong for the Japanese economy, and explain why, even if an acute crisis still looks unlikely, it's hard to see things getting better. Ever wondered who's really funding the news you read? Well, luckily you don't have to wonder with TLDR, as every year we share a detailed breakdown of our revenue, costs, and profitability. Find out who's funding us and if we made a profit last year by watching the video linked in the description. So let's start by explaining how Japan got itself into this predicament in the first place. After decades of rapid economic growth, in the 1990s, Japan suffered from a series of economic shocks in quick succession. Property prices and the stock market essentially collapsed, and Japan's economy entered a period of stagnation, with both growth and inflation falling close to zero. In an attempt to get the economy moving again, Japan's central bank, the Bank of Japan, or BOJ, bought up billions of yen's worth of government bonds, essentially printing money and giving it to the government to spend. Now, usually you would expect that printing lots of money would lead to inflation, and this was sort of the aim. Unfortunately for the BOJ, this didn't really happen. Both Japan's inflation rate and its growth rate stuck stubbornly close to zero, while the Japanese government's debt burden ballooned to more than 200% of GDP, one of the highest in the world. That was until early 2022, when the inflationary shock that swept across the world pushed Japan's annual inflation rate above 2% for the first time in nearly a decade. Originally, there was some hope that this external shock might bring the Japanese economy back to normality by triggering what's known as a wage price spiral. For context, a wage price spiral is what happens when workers start demanding higher wages to compensate for higher prices, which would mean more spending power for Japanese households and therefore higher prices, etc., etc. In the best case scenario, this sort of wage price spiral would essentially lift Japan's baseline inflation rate up from basically zero to nearer 2%, which is the Bank of Japan's target. In the best case scenario, this slightly higher inflation rate will also drive economic growth by encouraging Japanese households to spend money instead of saving it and letting inflation eat away at its real value. Unfortunately for Japan, while inflation did indeed return, it returned at a higher level than Japanese policymakers would have hoped, hovering well above the BOJ's 2% target for most of the past 4 years. This is in part because Japan suffered a more severe wage price spiral than expected. Wage growth for unionized workers has come in at 5% for the past 3 years, and because the global economy has experienced a series of additional inflationary shocks in the past couple of years, including most recently the war in Iran, which now threatens to push Japan's inflation rate back up above 2%. Anyway, persistent inflation is what's driven the ongoing sell-off of the yen, Japan's currency, which has fallen pretty steadily since 2022, but plummeted to a 40-year low of 163 against the dollar last week. This is in part because inflation erodes the real value of any currency, but also because, perhaps more fundamentally, the BOJ didn't raise interest rates as sharply as other central banks. For context, basically every country in the world has struggled with high inflation in recent years. To combat this inflation, basically every other central bank has raised interest rates, because higher interest rates are supposed to reduce inflation by encouraging people to save, and therefore sucking money out of the economy. The BOJ, however, held interest rates at negative 0.1% until March 2024, when it finally raised them to 0.1%. For context, at the same time, interest rates were at 4.5% in the EU and 5.5% in the US. This gap has narrowed a bit since then, but Japan still has basically the lowest interest rates in the world. This interest rate differential put more downward pressure on the yen, because it made it more attractive to save your money in dollars or euros rather than yen. This has been exacerbated by the fact that the BOJ has tried to intervene to defend the yen on a number of occasions since 2022, including most recently an eye-watering $73 billion intervention a couple of months ago in an attempt to hold the yen at 160, but these have ultimately been unsuccessful. This has undermined the BOJ's credibility with investors, who no longer believe in its ability to stem the yen's decline, and so have continued selling the currency in anticipation of further depreciation. So at this point you might be asking, why didn't the BOJ hike interest rates like everyone else? And well, some of it is down to the fact that inflation wasn't running as hot in Japan as in other countries. The main reason is Japan's massive debt burden. In short, raising interest rates almost mechanically pushes up bond yields as well, because higher interest rates encourage people to save, which means that there's less money sloshing around for anyone trying to borrow money, including the government. And this is why the BOJ didn't want to raise rates, because higher yields would make it significantly more expensive for the Japanese government to service, i.e. pay off the interest on, its massive debt pile. This was made even more difficult by the fact that Japanese bond yields were already rising, both because inflation also pushes up yields, and because, under Prime Minister Sanae Takaichi, Japan's government signaled that it wanted to borrow even more money in the coming years. Similarly, the BOJ couldn't just print money and give it to the government to keep yields down, because this would be inflationary. Artificially capping yields would also make Japanese bonds less attractive to international investors, which would put even more downward pressure on the yen. And this is the fundamental dilemma that the BOJ currently faces. High inflation and a depreciating currency should invite higher interest rates and less money printing. But the BOJ can't do this while Japan's fiscal situation looks so precarious. In this sense, the BOJ has to choose between a currency crisis and a bond crisis. So far, it looks like it's trying to split the difference. But while this strategy has been successful in averting an acute crisis, it hasn't been able to stem the ongoing sell-off in either Japan's currency or its bonds, which have both recently touched multi-decade lows. Now, to be clear, an acute crisis is still unlikely, for the simple reason that the Japanese state has, over the past couple of decades, accumulated trillions of dollars worth of foreign assets, which it could always sell off to try and pay down some of its debt or defend the yen. But this would amount to selling the family silver and leave the Japanese state less prepared for any future crises. Greenland. For decades, it's been viewed as little more than a giant ice sheet on the edge of the world. A massive ice fortress that most of us only ever saw from 30,000 feet on a flight to somewhere else. However, that ice is receding, and as it does, the world's superpowers are beginning to move in. At TLDR, we've spent almost 10 years explaining things from behind a desk, but some stories are too big for our studio. So to understand why this island, and the Arctic more generally, has suddenly become the most valuable real estate on Earth, we had to go there. As you'll soon discover though, this isn't just a political briefing hosted from the cold. We're hiking through the wild, discovering melting icebergs, and uncovering the rusting remnants of secret military projects abandoned in the snow.
I used to think I understood what cold was, but I was lying to myself.
Over 3 episodes, we're asking, what's the big deal with Greenland? From the scramble for rare earth minerals, to the new battlefield for Washington, Beijing, and Moscow. We're camping out in the glaciers that are changing our climate, and discovering the country caught in the middle of this global tug of war.
This is funny to you, Jet.
It will be funny to you in the future.
Hello.
Hello, deep there.
Jesus Christ. That's the whale.
Right wheel.
Rather appropriately for the world's largest island, this is the biggest project we've ever taken on. A documentary about the beauty, power, and future of our planet. Coming this summer exclusively to TLDR Party members. If you're not a TLDR Party member already, you can sign up right now. Members not only get access to 2 long documentaries like this one, but they also get access to the audio versions of every article in our magazine, Too Long, each narrated by the writers of those articles, allowing you to listen along to it all. You also get access to our behind-the-scenes podcast, The Bullpen, access to our extra podcasts, The Last Move and The Last Word, our brand new news quiz, plus our brand new UK politics podcast, Andemonium. Becoming a member costs £3.99 a month, but for the very best deal, you should grab the Too Long and TLDR Party bundle. That way you get both our quarterly magazine Too Long, as well as access to all of the benefits of TLDR Party, for a very discounted rate. Plus, if you use code Greenland, we'll give you an extra £4 off your first bundle payment, making it basically the same price as a standalone subscription. Find out more and support the channel at toolong.news/party.